Sridhar Sivaram, Investment Director in Enam Holdings, who's probably looked at this, markets and everything for such a long time, joins us in the studios. Sridhar, thank you so much for joining. And I can't help but start with the micro, simply because there is this AI summit on.
Of course.
Infosys has made an announcement, and we've spoken to a bunch of CEOs who've spoken about this. How do you think about this potential disruption? And bring in an investor lens as well. Even if the business doesn't get disrupted too much, maybe it does, maybe it doesn't, do valuations get disrupted?
Yeah. So, firstly, I want to say that within a firm itself, we have differing views. So this is my personal view. Okay, not necessarily the Enam view, given the history that a firm has had with many of the tech companies. My personal view has been that this is an industry which is getting disrupted. And I have held this view for over 2 years. Even when the sector was doing well, that was my view, that this sector is getting disrupted. It doesn't mean that their revenues become zero or the companies die. It's a derating event. So I equate this to what happened to the media industries. And you go back 10 years back and see a Sun TV or a Z, they were trading at 35, 40 P multiple. And the view then was that, hey, no, OTT will not have an impact. Deep inside, people still watch TV, which is true. What has happened in 10 years? The revenues haven't died. Their growth rates have fallen. So they're still generating enough revenues and profits, but the growth rates have fallen. But more importantly, the Ps have become single digit. So that is the event. So I've seen a lot of debates and discussions in X and Twitter where fund managers are tweeting with IT professionals and founders. The point here is that yes, the revenue growth has already slowed down in the last 2 years. Will it slow down more? I don't know. And the stocks have corrected a lot. Can there be a bounce back? Yes, possibly. But if I were to take a 5-year view, why would I want to pay 25, 30 P for a sector which is potentially getting disrupted? I mean, even the likes of Vishal Sikka saying it is getting disrupted. It's a question of time. And revenue growth is already very moderate. Why would I want to pay such high Ps? I think that is a question the market's asking. Generally, the collective wisdom of the market is always right because they look forward. It is more from an investing standpoint. It doesn't mean these companies will die. It doesn't mean that software services is not required. It is required. Will you pay the same P that you were earlier? At least my view is no. And the revenue growth will continue to moderate. That's how I'll put it.
I would like to actually push further into that conversation, which is that, and I was asking this earlier today as well, the tendency for the layperson is to broad brush this, so paint it with the same brush. But if you delve down into the services that are provided by IT companies, then you have to look at SaaS individually, you have to look at several other services, right? So I did ask whether you could look at each of these and think about the implications differently. I want to know whether you do. And also, from the perspective of the large companies, and if you liken them to big ships being unable to turn very effectively, incrementally, we're expecting to see impact on revenue. The old legacy projects will stay. So therefore, will the younger nimble companies, smaller nimble companies change much faster? And so therefore, can you not have an index level strategy for IT?
Yeah, so I'll tell you a founder of a very large IT company that I don't want to name, about 1.5 to 2 years back, told us in a closed door meeting that AI is both a threat and an opportunity. But unfortunately, the threat comes first and the opportunity comes later. And the opportunity comes to the companies who are nimble, exactly what you said, who are willing to disrupt themselves to get over the disruption, which is you cannot have this current business model of quarter on quarter, revenue. Somewhere you have to invest and tell investors that, listen, we are changing our business model and we are in transition for 2 years. I'm sure there's a lot of investors who would want to invest in a company like that, many who may not want to invest. And maybe the smaller companies are a bit more nimble to, adapt to the changes. So what I'm trying to say is that this is not like, as I said earlier also, it's not like these companies are going to, die, their revenues become zero. There is opportunity. The current business model has to be altered. The revenue growth will slow in the interim. And companies which adapt faster will emerge as winners. Who will emerge as winner? how this takes shape. And keep in mind that we haven't seen the pace of disruption that we are seeing right now in the past.
Yeah.
Let's be very honest. In our history, we haven't seen the AI disruption or any disruption happen so fast. The pace is really fast. Every day there is new development happening. And you have to speak to really techies to understand the impact of disruption. We are really not equipped to understand. But there is lots happening on the backside. My view is I will be significantly underweight this sector. I'm not equipped to understand which AI or which technology change will affect which company. I'm better off sitting on the sideline and watching this for some time. There's enough other opportunities.
Sridhar, what implications does this have for the index composition itself, right? If IT is 6 companies represented on the index, or 5, 6, right, whatever, then, and not growing as much. A clutch of other sectors out there or sectoral representations out there not necessarily growing. Does the Nifty 50 or the Sensex 30 look materially different in whatever, 1-2 years' time?
So I was speaking to an ex-colleague of mine in New York yesterday, and the discussion was like, why should I invest in India? Technology is having their own issues, and they are better positioned because they're right there where the action is, and they have so many options to invest. Within emerging markets, there are so many options. Just keep in mind that year to date, Korea is up 30%, Taiwan is up 18%. Okay, this is just 1.5 months. If I take last year, it is different. 10-year numbers also now, Taiwan, Korea are ahead of India. Dollar returns, MSCI. So, and this happened because of the last 3 years' returns. And the discussion is technology, too much of disruption. I have other options to invest within emerging markets and outside. The banking space is having its own challenges. The growth is very slow. The consumer sector is very expensive. Why should I invest in the Korean consumer companies in India when I can buy them in Korea at 1/10 the valuation? And as the discussion progresses, you suddenly feel, hey, this index is looking slightly bit odd because maybe the stories are behind under the index. Right. But for a large FII sitting outside in New York, they are really looking at the top 100 companies, not below, to a large extent. There, the story is looking a bit challenged, which is that many of the sectors, you keep looking at it and you say, if they're growing at single digit, why should I buy them in India? I'll buy them in some other country. And which is a fair number, a fair argument. And when we see the FII number, the FIIs are selling, they'll come back, they'll have to buy at a much higher price. I've seen all these arguments. They've been right. For the last 3 years, the other markets have significantly done better than India. Yeah. So I think somewhere we sitting in India have a myopic view of our country, our country is great, all that is fine. But for an emerging market fund manager, he has 30 countries. And he's looking at all the options available. And they've been right, let's be honest, that in the last 2 years, other emerging markets have done far better. Yeah. So that's the honest truth.
That is the honest truth. But having said that, let me take from what you said, you've looked at the 100 companies, right? And that is fair. Earnings have actually been a little better than some might have penciled in, both in the second quarter and in the third quarter. But my assumption from what you've said is that the story can be looked at beyond those 100 companies. So where, according to you, are the opportunities lying right now at the start of 2026?
Yeah, so I would say, some of the pharma companies are very unique to India. So I'm trying to see, what are the opportunities which come to India and not in other emerging markets. Pharmaceuticals surely comes right there. We are bullish on the GLP-1 opportunity because from March, this goes off patent in almost 70 countries, including India. And we think that, as this diabetes, stroke, weight loss, especially weight loss drug in India, if it's available at, say, 1/10 the price of what it is, or even lower, one of the analysts was explaining to me that, when I've been actually a big critique of Big Pharma, and Neeraj knows about this, that there are side effects to all these. Why should one take?
Yeah.
And the analyst made a point which sort of hit me. He said, the social stigma of a overweight person, a normal person will never know. And this analyst was talking to me was slightly overweight. And he said that after I have started taking this drug, the acceptance in socially for me has been so dramatic that I am fine with little bit of discomfort, little bit of nausea, little bit of not wanting to have food. And his view was that Indian women, especially when wedding season comes, 3 months before, a lot of people will start taking this because they want to look slimmer. And that's when I started thinking that this could be a blockbuster drug in India. I mean, we really don't know how it plays out, but the general chitter chatter of ladies, the first thing is, oh, you're looking slimmer. I mean, that is the first discussion that happens. And this could be one of those drugs. It does have a side effect, but I think as the analyst explained to me, which I never thought of, that this could make a big difference. And it comes off patent and the price will be much affordable. We'll have to see how it plays out. There are many stocks available in this space. It's not a single drug. All the large companies are there, smaller companies also there. That's one of the options. We like the power equipment story. A lot of them have corrected. We think it's a long-term theme, not only globally, even within India. As power demand keeps going up, power equipment companies will be in demand. Some companies have already done well. Some have corrected because the results haven't done well. But capital goods is generally like that. It's not quarter on quarter linear. There'll be ups and downs. But over a period, they should make money. Commodity is something that we still like. So we think that it's a global theme. That if you believe that AI, data center, EVs, electronics, all these things are going to continue, then you will need the base metals, all of them, copper, aluminium, zinc, silver. You can put all of them. You need all of them. There isn't enough supply. So then there are a lot of themes playing out.
Valuations are okay on
That's
these
what
companies?
I wanted to ask. Yeah.
So if
the metals particularly.
Yeah. So I think no analyst has the guts to put the current, the metal prices, the copper or the silver at $75 also. No analyst has $75 in their number.
Okay. What's the number that they have, you think?
Closer to 50, 55.
Okay. So there is.
So if you think that silver stays at 75, there's a huge upside. But it is, as I said, that you need to understand each of the segment, what is happening. In our view, there's a lot of shortage and there isn't enough supply because nobody has invested. Unlike in the previous cycles when commodities have boomed, generally promoters have gone and put tons of money into mines and have destroyed wealth. This time around, the promoters are returning cash.
Okay, we have a toss-up between a banking question and a wildlife question.
Please take.
Should we take the wildlife one?
Yes.
Okay, Sridhar, final tips. I think we've got some photographs of the RAS trip that you did. Tell us about it.
Oh, it was just amazing. I was trekking in eastern Himalayas in a place called Singalila, a group organized by nature explorers. We had gone there to look for a very exclusive animal called a red panda. And we were so lucky to see. We were trekking about 5-6 hours a day. And yeah, that's the beauty. And some really exotic birds in that region.
It looks like a toucan, isn't it?
No, it's more like a larger squirrel. And it's really pristine, very unexplored. So
what's this place called? Sorry?
It's called Singalila National Park.
Okay.
It is between India and Nepal. So it's on the borders of India and Nepal in North Bengal. So you have to go to Bagdogra and you have to drive for about 4-5 hours. And it's sub-zero temperatures there, but very beautiful.
Wow.
I mean, it was really amazing. Trekking for 5 days was bliss. I'm back with full energy now.
Yeah, and a pop of color in an otherwise relatively dreary market. Sridhar, thanks so much for taking the time. Absolute pleasure having you as always.
Thank you.